Hey, what's going on, YouTube? Kenny here. Okay, so today was a very bad bloodbath for tech specifically. Some sectors were fine. Some of my portfolio was fine. Some of your portfolio hopefully was fine. But if you have what Frank calls the 10x starter pack, that's like the Boston version of it. If you have the 10x starter pack, then you might have been hurt a little bit as well today. So this is the map that we're looking at. As you can see, AMD not looking so good. Negative 3.89%. Who went with us? Adobe went with us. That is very ill-deserved. Adobe is not even trading that rich, really. Okay. NVIDIA, negative 4.49%. AMD, obviously, and then Apple down 2.45%. So it's bad for everybody if you're tech. And we saw this coming. We knew it was coming, but I did think it would take a little bit longer. I thought there was going to be a little bit more of a surge, and then we were going to fall off. So I timed this incorrectly, but here it is. We are taking a ride to the downside, boys and girls. If you have options that are coming due, it's going to be rough. I did have a Corsair option that was, I still got a month on it, but I'm probably thinking about where I'm going to stop out now. I'm not very confident that I will be profitable on that. I will just say that for sure, for certain. Okay, stand by. You're like, Kenny, it's not Red Wine Saturday. No, it's beer. What is it, Wednesday? That's because it was bad. It's bloodbath, guys, girls. So we need to soak it in. Okay, so what was safe? How could you have played this, and how well did you do? I did not so well because we have been loading up on AMD on the way down, which is fine. But this is when I tell people, you need to go take a break, you need to go for a walk. If you're full in on tech and you have like Apple and AMD and you love them and they're chef's kiss for you, no problem. Go for a walk. Do not fucking sell whatever you do. Do not. This is when you don't sell. This is, when they say diamond hands and everybody's like, oh yeah, I got diamond. No, you really need to have diamond hands. Don't get silly here. This is what it matters. Okay. Okay. What's next? Let me go through some things and show you why things are happening the way that they're happening. We talked about the sector rotations. We knew energy was going to get really pumped up, and it is. Energy sector is good. We knew financials were going to come up. Excuse me. Based on our sector rotation chart off of a recession recovery. But how else could you have figured it out? How else would you have known that? Well, it's actually dang obvious for folks in the financial sector, but maybe not for retail money. So if you're new to trading and you're wondering where is all the money's going, let me show you. Okay, so this is a price to book ratio based on sector. Excuse me. Okay, if you're new to this channel, we do everything in one take, so take it or leave it. You don't have to watch. I also, anyways, that's neither here nor there. Okay, so here we go. Price to book ratio by sector, large cap U.S. companies. Okay, so here is December 31st, 2020. So this is not the most up-to-date data, but we'll take it, okay? So here to the left. Don't worry about this. You could have been worrying about it as we were going down, right? But essentially, let's look at energy, right? Energy was trading at 1.6, 1.6, 1.6, 1.1. 1.28 was when it started recovering. This is when you should have bought energy. I wouldn't have bought it here, right? This was the first quarter that it turned around. And we did a video on energy, the energy play. And when this happened, we got long on XEC and a few other energy stocks. Now, how did we know this? Well, look, guys, girls. You got consumer discretionary trading at 11 times price to book. You got tech trading at 11 times price to book, right? And you got energies and financials at 1 times. These guys, I know, they're growth stocks. You don't understand innovation. Only ARK understands innovation. I got it. I know. I don't understand. I'm too dumb. I got you. But come on, man. Utilities, materials, come on. Why do you think uranium is going crazy right now, right? These are kind of fine, but real estate, snacks, and financials, okay? So this is just simple maths, okay? I'm not going to belabor the point, but if you wanted to know, hey, Kenny, let's break it down some more. Well, you got this from NY Stern, right? Our boy Asimoth Damodaran put this together. You can steal his data. I think it's publicly available. Yeah, and NY Stern data sets. Yeah. So here's the price to book values. I have it sorted by lowest to highest, right? So obviously on the highest side, computer and peripherals and trading at 22 times, software at 15 times price to book, right? Semiconductors, 7.87. And so we go down the list, and the cheapest stuff is obviously insurance. I don't know about lemonade, but insurance for sure. Banks, oil and gas, more banks, more oil and gas, but production and exploration. And it breaks it down so you can really, really get a sense of what's undervalued, right? Anything under one, back in the days was like the thing, right? Like right now you can only find two things under one, which is reinsurance and life insurance. So go figure. How do you invest it? I don't know. I'm not a life insurance investment guy. I don't know. I haven't done any research on any companies that do life insurance. I'm just trying to show you that these are the things that you can look at in terms of where the money is probably going to go. Okay. Capiche? Good. All right. Now I'm going to talk to you about why the EV market is going to get shorted by Kenny. Okay. Stand by. This is going to take a great amount of courage. And me not reading the comments down below because it's probably get bad, but I don't care. I'm going to tell you why, and we'll just show this off real quick. So we are going to do our slideshow. We're going to show you why it is getting ridiculous out there. Okay, so maybe I should have done this video earlier or whatever like that, but I did kind of tell you that Tesla was overvalued, so I don't really feel bad. Plus, you're large, big boys and girls, and you wouldn't listen to me anyways. You would have been like, Kenny, you're dumb. And you probably still think I'm dumb. You're going to be like, okay, Tesla's going to go to 1,500 this year. Maybe. I might. Nobody knows, you know. I don't have, you know, palm reading skills, you know. But I know when stuff is overvalued. So you're like, Kenny, you're talking a lot. Just show us what you're talking about. Okay, this is real simple, right? You got Toyota Motors on the left, and you got Tesla. I already know your argument. I know what you're going to say. You're going to say it's not a car company. I don't care. That's fine. Let's argue that it's not a car company. All right, stand by. All right, so remember we were talking price to book. Toyota is trading at a price to book of 1, okay? And Tesla is at 29.6. So Tesla is being valued 29.6 times price to book over Toyota. Real simple number, 1, right? Now let's do the revenue game. Here's where it gets just damn silly. Stand by. Excuse me. Toyota's revenue, top line, $257 billion. Tesla, $31 billion. That's with tax credits and all that other stuff too, okay? Fine, I'll give it to them. I don't care. I'm not a hater. I want it Tesla. You know, as soon as I get back to the States, I'm going to buy one that self-drives me. I like the Tesla, but I'm looking at valuation. And okay, you Tesla bulls, you can say whatever you want. It's an energy company. That's fine because I'm going to show you something else after this. All right, with a PE ratio, okay, price to earnings ratio of 14 times, okay? Tesla is trading at almost 1,000 times, okay? And it went down, but it was like at 1,000 times, right? And let's look at total assets, $561 billion in total assets. 10 times that or more, 10 point something times Tesla at 52.1. Wow. Okay, so total assets, don't even worry about this. Let's just do revenue then. Look, $257 billion in revenue against $31 billion, okay? 30 times price to book trading at. So it's 30 times more expensive than Toyota. Okay, so you're saying that's fine, Kenny, because you don't understand innovation. You don't understand how they're going to take over all the markets, and people are only going to buy Tesla. Nobody else is going to know how to make an electric vehicle. It's impossible to make electric vehicles. Only one man could ever make an electric vehicle. And this is some shots fired, but okay, that's fine. I'll give it to you. I actually give it to you. All right, Tesla bulls, I give it to you. I give it all to you. Okay, check this out, though. What about NIO? Is NIO not a car company? Oh, you're going to say it's a battery swapping company. It's all this other stuff. That's fine. Okay, let's play this game. We're going to play this game to fruition, guys. We're going to go all the way down. We're going to walk the dog. Still, 16 times more expensive than Toyota. This is what this means, right? And I use Toyota because it's trading at 1 times price to book, so it's super easy to see how much more expensive NIO is than Toyota. Toyota's been making cars forever. They have a revenue of $257 billion. NIO has a revenue of $2 billion, and we're valuing it at 16 times earnings. Okay. These guys are making the monies, guys, girls. They're making the monies. Okay. These guys are making some money, and it might be good. You know why this is a negative PE ratio? Because they don't have any earnings. All right. And then in terms of assets, let's look at it. 8 billion versus 561. Which company would you guys like to earn? No, Toyota's a crap company. Why would anybody buy Toyota? Stupid company. Okay. Dumb company. Just making, I don't know, $257 billion in revenue a year. Stupid company, right? All right, you're like, all right, NIO is a Chinese company. It's huge total addressable market. It's got battery swapping technologies. It's got auto driving. Toyota could never figure out how to do auto driving. How could they possibly, not with their huge engineering capabilities and their huge staff, right? They could never do that. It's impossible, right? Okay, but all right, that's fine. I'll take it. Boys, girls, gentlemen, ladies, I'll take it. I'll take all that criticism. But let's go next. Let me tell you, is Workhorse more than an EV company? In fact, not only they're just an EV company, they're a very specific EV company that does last mile delivery. So now I'm not even saying that they're just EV. They're specifically one type of EV. Now don't tell me, are they an energy company too? No? Okay. And this is after the Great Fall. So this was like 8 times just a couple weeks ago, right? So Toyota, let's do this again. 1 times. Workhorse is 5 times, 4.9 times more expensive than Toyota. It is worth more than Toyota according to their stock price, right? And look at this. Toyota made $257 billion in revenue versus $1.3 million in revenue. And even PE ratio trading way richer than Toyota. So tell me, is Workhorse not an EV company? Is it like, oh my God, guys, Kenny, you don't understand. The folks at Workhorse, the engineers there, they're just so much better than the folks at Toyota. The folks at Toyota are so dumb, they'll never be able to figure out how Workhorse engineers their electric vehicles. Impossible. It's impossible. Okay. I am going to show you one more slide just to drive it home. And here you go. This is the visualization of how silly it is. So in the red is the total assets. Let's just look at total assets. This is total assets, red. Okay, that's Toyota. This is Tesla. This is NIO. And this is Workhorse. Now, let's look at the price to book for each company. This is Toyota, how much it's worth relative. This is Tesla. So this is what you're supposed to be looking at, right? This is what's supposed to really looking at. These two comparables. And then here's NIO. Right? And Workhorse. But, I mean, even if you just compare Tesla and Toyota, these two, these guys versus these guys, it gets pretty silly. Man. All right. I'm not going to say anything else. I already know what's going to come. It's going to be, Kenny, you're dumb. Kenny, you're arrogant. Kenny, you're stupid. But I don't care about that. I'm here to save some of y'all money. Now, am I telling you to short? Probably not, because I'll tell you why. Because some of you guys don't know how to do it properly, and you'll probably lose more money doing it than you could get. So today I was short NIO. But when I short things that are in sentiment decay, I do it in pockets until I'm very, very sure. I'm trying to bring up one of the charts for you so you could see. So for NIO today, you definitely have a lot of pressure under the 50 EMA. I don't have the other EMA lines up here. Let me pull them up. Or I'm sorry, SMA. We're looking at SMA. Stand by. We have to fix this from last time. Okay. Under a lot of pressure. But again, the reason why we're short now is because there's a fundamental change right now in the way that the markets are perceiving things. Price to book is starting to matter. And because of that, and because of the EV sentiment layer now getting kind of popped a little bit in the face, and that NIO deliveries were kind of lackluster because of a bunch of different reasons. You're like, oh, Lunar New Year and all this other stuff. It doesn't matter. I don't care about that. The semiconductor, the chips and stuff for Q3 are going to be a little bit lagging. It's not a perfect storm anymore for sentiment, right? So given that, and given the retail kind of recalcitrance to deploy any more money, I would say that this is definitely a downward spiral. In fact, I think we see 36 again at the bare minimum for NIO, but I would not be shocked if we see 25. And on the Tesla side, I'm not going to say anything because Tesla bulls will slay me for thinking about that. But if I'm going to short a company, I'm probably not going to short Tesla anyways, even though I think it will bleed off. And the reason for that is just you can't just if you do it like I said, you do it in pockets, right? You do it in pockets. You get in, you get out, and you take your wins where you can. All right, don't try to pull Michael Berry and just try to hold until, and then basically almost go broke, and then finally at the end of the day win the battle. It's just too hard to sleep at night, right? Doing that, and you can definitely get crushed under the weight of a nice little rally. So that said, try to get your days. If you see it really tough and is having a hard time staying afloat, then just go ahead and take that day trade or the swing trade or whatever like that. Right now I'm holding NIO short. We'll see what happens tomorrow morning. I might have to exit quickly. I doubt it though, honestly. I think again we're gonna go for a little bit of ride. And why am I saying this? And you're like, oh, Kenny, you never tell me about short positions. You said you don't want to tell people about short positions. I don't, but this is a big, I think, change. I don't know. I don't have a crystal ball. This is my bullshit palm reading, just like you, but a couple of factors are really playing in. One, the eventuality of people actually coming to terms with price to book and price to earnings is actually happening. You can see that because the energy trade is working. We're up 26% on all of our energy plays, right? Roughly 26% because we deployed capital early. Two, the sentiment for EVs is waning. It's not saying that the EV market's shit. It's not saying that Tesla is not innovative and one of the best companies in the world. I don't disagree with any of that. What I disagree with is the fact that it is overvalued. Okay. And we can argue about that. I don't mind, if you're a Tesla bull and you're a long-term holder, there's no reason to fear. Just keep buying on these dips, right? I would suggest that you do. And if you're a long-term investor and holder, but I'm saying right now, there is money to be made on the downside of this. And if you're too scared to deploy money on the downside, which I don't blame you because it is kind of hard. If you haven't done it before, you might get blown out a couple of times. But if you're willing to do it, it is definitely profitable. The second thing you can do is actually deploy money to those sectors that we were talking about. Your energy stocks, your financials, even Boeing got a little bit of a bump. So the reopening place, Six Flags was another play that we were talking about. There's a bunch. Consumer discretionary is probably going to start taking off real soon here. So we're a little bit, I think we're early still on the energy play. I think the precious metals, things like uranium, that have a little bit of a runway towards clean energy, quote unquote, are probably going to be decent plays as well. So there's a lot of options out there. Don't get fixated on tech and don't get fixated on EV. But you're like, Kenny, you told us Corsair and AMD. Why are you saying don't get? I said that they were long plays. Corsair is absolutely an esports play for me. It's a long-term play. I am buying. I bought some today. AMD, I bought a tranche today. I have one left to deploy, okay? I have one more piece of dry powder to deploy against AMD, and I'm saving that for some reason. If it's crazy enough to go past 75 or under, we'll deploy the final tranche and we'll walk away. I will give you another tip. What I did for AMD and Corsair, put them all into one account. And again, you can have as many accounts as you want on TD Ameritrade. But, I unlinked it from my Thinkorswim and I removed it from my dashboard. So I do not even see that anymore. So when AMD or Corsair get to my price targets, I'll hear the alert, like around 96, 97, I'll hear an alert for AMD. I'll obviously look at it too every day still. But if I hear the alert, I'll come back and then I'll re-add those accounts to my dashboard. And the reason I do that is trading is a mental game. If anybody says it's not, you're out of your mind. There's so many people who've lost a ton of money pretending that they had diamond hands when they had paper hands. So for all those reasons, even me, I turned that stuff off. And today I bought one of the biggest tranches for AMD that I've bought this year, and I am turning it off. If it hits under 75, I will be alerted and I will buy my final one. And but I'm still not on my dashboard. If we recover and it hits 96, 97, I get another alert and I will come back and play and put it back onto my dashboard. But that's how I'm playing it. And really, that's all I wanted to say today. Okay, if you like this, I don't think anybody's going to like this. Oh man. Anyways, comment. Tell me what you think. I don't mind. Like I know that there's another side of the trade, and I am reasonably sure that there's a good chance that I'm wrong about this. But just based on the time I've had in the markets, the experiences that I've had, and the way that bubbles play out, pull back, nobody ever sees it. Everybody, even when there's evidence to suggest the bubble's popping, like right now, I'm not saying it is. I'm not saying it is. It has. I don't know. But I'm playing it like it is, okay? Until it proves otherwise with a rally, I'm playing this like the bubble's popping, because nobody ever gets out in time when they don't address it. And again, I realize there's another side of the trade, but if you watch it this far, if you do comment below and you comment on the other side of the trade, like you're like, okay, Kenny, I don't agree with you, but here's my perspective. Put down KK. Okay, put down KK and then your statement, your responding statement. So I know that you're watching it and you're actually trying to understand my point of view, and then you have a different and contrarian point of view from me, and that's fine. If you don't put KK in there, then I'm not even gonna. I'm just gonna be like, whatever. You didn't even watch the video. You're just coming in here being a troll. But if you put KK and you put a contrarian kind of point of view down there, I will definitely read it and I will address it. And if you make a strong argument, I will be moved. I'm agnostic to the way the market moves. I just want to be on the right side of the trade. And right now, I think the right side of the trade is the side that is going down for EVs specifically. So that's all I have for today's video. If you liked it, then give me some support, because I think I'm going to get beat up on this one pretty good. All right. Thanks for watching, guys and girls. I appreciate you, and we will see you tomorrow.